let's now run through the markets in West Africa, starting with the BRVM 10 index. Yesterday closing at 207 points, down about 1.77%. Meanwhile, the all-share index, which is the BRVM composite, lost 1.4%, closing at 189 points. Total value traded in that market was 1.1 billion CFA francs, and the currency currently trading at 504 CFA to the US dollar. As I just mentioned earlier, the market in Ghana was down about 0.5%. The JSE composite closing at 1,808 points. The CD also slightly weaker at 1.97 CDs to the US dollar. And moving on to Nigeria, the market fell back a little bit after gaining 5% last week. Started the week down to about 0.5%. The NSE all-share index closing at 34,935 points. Let's now hear from Jide Allo. He is an analyst with Stanbic IBTC Asset Management, and he will give us his thoughts on this market rally. Thank you so much, Jide, for joining us. Maybe we should start by getting your thoughts on the broad market performance. We saw a very strong performance last week, perhaps lifted by Dangote Cement, and we'll get to that in a little bit to get your thoughts on the cement sector. But your thoughts about how the market has started this week and where we are, how it's likely to trend over the next few sessions.
The market started on a low, like you just mentioned, was down 50 basis points yesterday. That's on the back of a very strong rally from last week, where all the losses of Q2 were corrected, and so right now the market is up this quarter about 24. Year to date, rather, the market is up 24.4%. We expect the strong rally that we have seen to be sustained across the quarter. For this week, I think we're likely to see a little bit of profit taking. The likes of Dangote Cement, Nestle, Nigerian breweries, you are likely to see people begin to take some profit, even across the market, as well as in some banking stocks as well. Right. So overall this week, we expect that the market should close around about flat.
All right, if we focus on that stock, Dangote Cement, it's recently touched an all-time high. Your thoughts about its valuation right now? Is it good value at the current level? We know the first quarter numbers were very impressive, profits up about 81%, but then many will argue that that's already been priced into the stock. Your thoughts?
I think clearly the results from Dangote Cement this quarter is quite ahead of expectation. We saw a very strong growth in Q1, coming from the slow growth we saw in quarter 4 as a result of the incidents with the flood and slowdown in construction activities generally. But this quarter we've seen a very strong pickup. We expect that across the year, Dangote Cement should release a very strong performance. You would also notice that in terms of their top line and bottom line, we are seeing strong growth coming out of there. They are able to also increase their efficiency with the use of gas, and so right now they are, compared with the estimate that it would be about 80% utilization of gas for this year, they are already about 85% and 90% respectively in their plants, and we expect that without any major shock to gas supply across the nation, that trend should be sustained. If it is sustained, we expect that it would also be able to reflect a stronger bottom line growth. And so overall for this year, we expect that Dangote Cement will do very well. In terms of the pricing right now, I think the way we like to look at it is that Dangote Cement is a stock we like to have in our books over the long term. Right now is trading around about its intrinsic value. But for investors who are interested in having a long-term play within that sector, you certainly can't do without a Dangote Cement that controls about 70% of the total market, a stock that is also into expansion, a company into expansion across Africa. We expect that they begin to export to Sudan and Niger this year. So whereas other companies within the sector would have to contend with the fact that there's tendency of excess supply, which may lead to price war, if you like. We expect that Dangote Cement is in a better position to manage that because of its size and its expansion activities. So over the medium to long term, we are comfortable with Dangote Cement. All right,
so you're buying into the market leadership, its positioning in the market, that perhaps justify buying at these prices. I think that's what I hear you saying. But let's talk about its key competitor, particularly in the West, that's Lafarge Wapco. They also reported first quarter numbers, EPS up 49%, so pretty robust growth as well. Your thoughts about that counter? Is that something you'll be adding to your portfolio?
I think for Lafarge WAPCO, the results wasn't as strong as expected. We saw a top-line growth of around about 3% compared with expectation of around 12%. However, they were able to also benefit from improvements in their operational efficiency, and so we saw a reduction in sales, general and admin costs, as well as general operating expenses as well, which helped them to enhance their bottom line. We also saw that the pioneer status has also kicked in, which helps to reduce their corporate tax from around about 30% to around 16% this quarter, and that should be sustained across the year. For Lafarge WAPCO, we think that at its current price, it's fairly priced right now. And in terms of entry, I think as an investor, I would love to find a lower entry price for me to get into Lafarge WAPCO right now. But if you look at it over the medium to long term, the fundamentals are still very strong for the stock. It's the next largest in the sector after Dangote Cement, with a market size of around 16%, and it continues to grow with their expansion plans as well. Right. So we think that at around this price is fairly priced, but the fundamentals are also great for the company going forward.
Okay, so between Lafarge WAPCO and Dangote Cement, what will you be picking? Which will you pick first?
I would pick Dangote Cement, certainly.
Right. Okay, let's move on to the other players in the sector. We're still expecting them to release numbers. Ashaka Cement and CCN and Cement Company of Northern Nigeria. Your thoughts on those two stocks? Of course, Ashaka Cement is also a subsidiary of the French building materials maker Lafarge.
I think for the two companies, we expect the kind of trend we have seen with Lafarge WAPCO and Dangote Cement to reflect in their numbers as well. Across the sector, there is now improvement in demand, and so the companies should be able to benefit from that. It should help them to grow their top line. We've also seen that government has been consistent with no importation policy, with imports around about 5%. So we expect that the companies in that sector will continue to benefit from that favorable government disposition. In terms of the operational efficiency as well, for Ashaka Cement and CCNN, they are still in the process of expanding their capacity, and so they are not able to directly benefit from the benefit of improved production efficiency, unlike Dangote Cement and Lafarge WAPCO. So overall, we expect that their results should be generally in line. In fact, if you look at valuation right now, I think Ashaka Cement and CCNN actually provide investors with attractive entry prices, because based on our expectation, there's still about 20% growth for Ashaka Cement and about 27% upside potential for CCNN. However, if you look at it over the medium to long term, we think that the fundamentals are more in favor of Lafarge WAPCO and Dangote Cement.
Right.